Hi, welcome today to our exam revision tutorial on cash flow statements. Our learning intentions today are to understand that cash and profit are not always equal, to be able to prepare a cash flow statement and reconciliation statements under FRS 1, and to be able to prepare an abridged profit and loss account. So what is a cash flow statement? A cash flow statement is a primary financial statement along with a trading profit and loss account and balance sheet. It is used to assess past cash flows along with helping to forecast future cash flows, and are concerned with describing and examining the inflows and outflows of cash that lead to the change in the cash figure from one balance sheet to the next. So what is the purpose of the cash flow statement? To show cash inflows and outflows during the period, so cash coming in and cash going out during the period, to assess the liquidity and solvency of a firm, so to see is the firm sustainable in the short term and the long term, to help management in financial planning, so maybe if the company is going for a bank loan, they may need to provide a cash flow statement, to comply with legal requirements such as FRS 1, and to show that profit does not always equal cash. So what are non-cash items? Non-cash items in the profit and loss account affect the net profit, but they do not change the cash situation. So examples include depreciation. Depreciation is a non-cash item because depreciation will reduce our profit because it's an expense, but we don't physically pay it over to anybody. Change in the net, the provision for bad debts is a non-cash item. Again, it changes over time based on debtors. It's usually a percentage of debtors, but again, you don't physically pay it over to anybody. And profit and loss on sale of fixed assets is also a non-cash item. Why does profit not always equal cash? It is important to know that profit does not always equal cash. Some transactions will affect cash but not profit. Examples include the purchase or sale of a fixed asset will increase or decrease cash but not change profit. That's because that's because purchase and sale of a fixed asset is a balance sheet item and won't affect our profit. Introduction, withdrawal of capital will affect cash flow but not change profit also, and non-cash items will affect profit but not cash. So to approach answering the question that leave insert, the first thing I would do is to do up some notes to the cash flow. So again, I would have a look at the assets. So I would do a note on the cost of fixed assets. I would start off with getting the closing balance. Then I take away the opening balance for the cost of the fixed asset. Then I add disposals, and this would give me the payment to acquire tangible fixed assets, which is a figure I will need when preparing the cash flow statement and accompanying statements. For fixed assets, depreciation, again, same thing, closing balance, take away opening balance. I'd add disposals, and that would give me my depreciation charge for the year, which I'll also need. And for the profit and loss, I would get my cost, take away the depreciation. That will give me the net book value or how much it's worth. I would see how much I received, and if I received more than the net book value, it would be a profit. If I received less than the net book value, it would be a loss. So these figures in blue, I will need again when doing cash flow statement. Again, also I would do a note on debenture interest, taxation, dividend, and investment income. So for all of these, I would start off with the opening balance. I would see what the charge is for the year, the expense for these three, or the income here, and add that on. I would take away my closing balance for all the figures, and that will give me the expense paid for debenture interest, taxation, or dividend, or it will give me the income received if it's investment income we're talking about. These figures here, these four figures in green, I will use in my abridged P&L because they're the actual charges for the year. And these figures in yellow, I will use in my cash flow statement because that's what I either paid out or received, and that's what will go in the cash flow statement. So the charges for the year goes in the abridged P&L, and what I actually paid out or got in will go in my cash flow statement. And again, we see this more clearly when we go through a worked out solution. So the first thing we're asked to do in the 100-marker question is to prepare an abridged profit and loss account to ascertain the operating profit for the year end. So basically here you start off at the bottom and you work your way back up. So I get my profit and loss balance at the end of the year, take away my profit and loss balance at the start of the year, which gives me the question, and that will give me my retained profit. And these figures here in yellow, I have worked out in my notes a few minutes ago. That's why it's easy. You're better off to do the notes first of all. So when I fill in these figures for my notes previously, I'm simply working my way back up. So my sum figure less my dividends give me my retained profit. If I add that on, it will give me my profit after tax. And similarly here, I'm adding back on. If it's a negative, when I work back up, I'm adding it back on. If it's a positive, I'm taking it away. And that will bring you back up to your operating profit. So then I have to prepare the cash flow statement for the year ending, whatever the year ending is, including reconciliation statements here. So the first thing I'm going to do then is to do one of my reconciliation statements. So I'm going to get the reconciliation of operating profit to net cash inflow from operating activities. So now I'm going to start off with my operating profit from part A of the question. That is the first figure that I worked back up towards in the previous part. Then I have to add depreciation. I will always add depreciation, okay? Depreciation I will always add. Then for some of these here, for the loss on disposal, increase in bad debt provision, decrease the stock. So for profit loss on disposal, increase or decrease in bad debt provision, stock debtors and creditors we will add or take away depending on which they are. So if we look at the disposal, first of all, it's kind of the opposite of what you think. If it's a loss, I would add it on, and if it's a profit, I would take it away. It's just an easy way to remember what to do. For the bad debt provision, it's the same as what it sounds like it should be. So if it's an increase, I would add it on in the bad debt provision. If it's a decrease, I'll take it away. That's what I mean by the same. If it's an increase, it's the same as you think it should be. You would add it on. If it's a decrease, I'll take it away. For stock and debtors are both assets, so they'll be the same. They're the opposite of what you think. So if it's a decrease, you add it on. If it's an increase, you take it away. Same with debtors. A decrease, I would add it on. An increase, I would take it away, because it's the opposite of what you think it should be. And creditors are the same as what you think it should be, meaning if it's an increase, you would add it on, and if it's a decrease, you would take it away. So there are just some simple rules there. So for depreciation, always add it on. And for these ones here, if you just remember, disposal, stock and debtors are the same as what you think. Increase, you add. Decrease, you take away. And the disposals, they're the opposite of what you think. The disposals, the stock and debtors are the opposite. So if it's an increase, you would take away. A decrease, you add it on. And the bad debt provision and the creditors are the same as what you think, meaning if it's an increase, you would add it on, and a decrease, you take it away. That's just an easy way to remember. But why would you do this? So if we just look at some of them, I suppose. A decrease in stock. If you have a decrease in stock, means you sold more stock during the period. So that would be the opposite. You'd add it on because you'd have more cash. Okay. Debtors, if there is a decrease in debtors, are people that owe us money. If there's a decrease in debtors, it means more people has paid us, so our cash would go up. So that's why it's the opposite. It would be a plus figure. And for creditors, let's say we look at creditors. If there's an increase in creditors, creditors are people that we owe money to. Okay, so if there's an increase in creditors, means they've gone up, means we paid them less. So that's the same as what you think. It would be a plus figure. The cash figure will go up because we paid less money out to creditors. But these, in an exam situation, it can be hard to think of what you should do here. So I just remember these simple rules. Now, the actual cash flow itself. So the cash flow itself has 7 headings. Okay, usually you would add up to the first 5 headings, and then you would include the next 2 headings to give you your increase or decrease in cash. So the first thing is operating activities. The first thing here is your net cash inflow from operating activities. And you would have got that from the previous part of the question there. Net cash inflow or outflow from operating activities. If it's an inflow, it's a plus figure. If it was an outflow, it would be a negative figure. Return on investment and servicing of finance, any investment income received will go in here, and that'll be a plus figure because it'll be plus cash. And debenture interest paid will be a negative figure because it's money paid out. Heading 3 is taxation. That's just tax paid. And again, all of these figures here in yellow, we have worked out in previous parts. That in our notes. You know, we did the notes at the start. We have worked out all of these figures in yellow. So when we do your notes first, it'll be a big help when filling this in. So as I said, taxation is simply tax paid. Capital expenditure and financial investment is any sales or purchases of investments or sales and purchases of fixed assets will go here. And again, if it is a payment, it'll be a minus. If it's a receipt, it'll be a plus. The next one here, dividends, equity dividends paid, is just dividends paid during the year, and we'll have worked that out in our notes. Then after these 5 headings, we add these up. And if the plus figure, it'll be a net cash inflow before liquid resources and financing. If it was a negative figure, it'll be an outflow. Heading 6 is management of liquid resources. That's just always if you purchase government securities, and it'll be a negative figure because you're spending money. And financing is receipts from the issue of debentures or repayments of debentures. Sometimes you would increase your loan, so you would be an issue of debentures. Sometimes you would pay back your loan, which would be a repayment of debentures. So if you increase your loan or debentures, you're getting more cash, it'll be a plus figure. If you're repaying a loan, you'd have spent money to repay the loan, it'll be a minus. And then if we sell more share capital or get more share premium, they'll be plus figures because it'll be an injection of cash. So again, after 5, we've totaled it, and then we add in 6 and 7, and that will give me an increase or decrease in cash. Again, it's a plus figure to be an increase, a negative figure decrease. And you can check that against your balance sheet to see in your balance sheet, has your cash gone up or down, and you can check that against this figure here. So you'll be able to see if your figure here is correct, because it should tie back in to the increase or decrease from 1 year later in your bank and cash figures. Now, the next thing we have to do is to prepare a reconciliation of net cash flow to movement in net debt. So here we're going to start off the increase or decrease in the cash during the period from the previous part of the question we just looked at there from the cash flow statement. We're going to add in cash used to purchase liquid resources, which is the government securities. Then we're going to include issue or repayment of debentures. So the easy way to remember this is the opposite sign of whatever the figure was in the previous part. So if we go back here to part 7, if our debentures here is a negative, it's going to be a plus here. If it was a plus back in part 7, it will be a negative here. We're going to add these down to give me the change in net debt. Then we're going to get our net debt at the start. So whatever our change in net debt is, we're going to add it to our net debt in the start, and that will give us our net debt at the end. And then we can check that net debt at the end. If we go to our balance sheet and we look at our net debt, it should tie back into this figure here. Now, what is net debt made up of? It's made up of our bank figures, really. It's bank cash and government securities. If they're positives, if they're assets, there'll be a plus figures here. And then you take away any bad bank figures, I suppose, which would be a bank overdraft or your debentures, which are long-term loans. So get your bank and your cash and your government securities and take away your bank overdraft and debentures. So obviously, in a certain year, if you have an asset of bank, you won't have an overdraft in the same year. It's either going to be an asset or a liability or bank or bank overdraft, depending on whether you have money in the bank or not that year. So now it's probably just easier to follow this through a real worked out solution. So we're going to have a look at the solution to this 2015 higher level cash flow question now. Hi, today we are going to have a look at the 2015 Leaving Cert higher level cash flow question. Before we get into the actual question itself, I think it is useful to do some workings before you start, because these cells that are highlighted here, the 3 green ones and the blue and the yellow ones, are figures that students can find difficult to work out. So I think it's no harm to start off doing these workings first, and then to make it easier when we go to do the profit and loss and the cash flow. The first working I would do is on fixed assets. So if we go back to the question, opening fixed assets are 470,000 and the closing fixed assets are 640,000. So if there was no sale of fixed assets, then the difference between 470 and 640 will be just purchases. But in this question, there are disposals of fixed assets in the question. We can see here in note 2, fixed assets which cost 50,000 and a depreciation of 25 were sold for 30. So the cost of those assets that were sold were 50,000. So into my workings here, I'm going to take away 50,000. So at the start we had 47, and then if we got rid of 50,000 worth, suppose that leaves us 420,000, and at the end we had 640. So the difference between the 420 and the 640 must have been purchases. So it is that. Sorry. So simply, it might be easier just to say 470 minus 50 is 420. So this is just going to be 640 minus that 420. So it started with 470, sold 50, purchased 220, and it finished with 640. The depreciation, again, we're going to do a note of depreciation. So the opening depreciation we can see here is 80, and the closing depreciation was 200. So again, opening was 80, closing 200. Again, if there was no disposal, that would all be just the depreciation charge for the year, but if there was a disposal of a fixed asset, and again, we can see from note 2, the depreciation on that asset is 25,000. We no longer have that asset, so the depreciation needs to come out of 25. So at the start we had 80 and the depreciation and disposal 25, that brings us down to 55. At the end of the year, depreciation was 200, so the difference must have been the expense for the year. So it'll be 200 minus the 55,000. So the expense for the year was 145,000. Then the profit and loss on the sale of fixed asset. Again, we can see from the question down here that the cost was 50 and the depreciation was 25. So if it cost 50,000 and depreciation was 25,000, then it was worth, or at a net book value of 25,000. In the question, it says it was disposed of for 30,000. So if it was worth 25 and it was disposed of for 30, there would be a profit of 5,000. If the amount you received was less than the net book value, you would have a loss. We should do a note here on the expenses also, because we're going to need these 6 figures either for the abridged P&L or for the cash flow, so it can be useful to do those now. Again, there's no investment income in this question, but if there was, I would do a column for investment income the same way. To start off with debenture interest. So debenture interest is a liability. There's no debenture interest owed at the start of the year, or there's no debenture interest owed at the end of the year. So the opening balance and closing balance will be 0. In the question, it says that if we look at the debenture interest, 50,000 debentures were issued on the 1st of the 1st, and that date is important. So our debentures at the start were 130, then by the end of the year it went up to 180. Now that increase happened at the 1st of the 1st, meaning there were 180 for the year. So if I go to calculate my debenture interest, it will be 10% of 180. If those debenture interests were purchased at the 31st of the 12th, then they would have been 130 for the year, and they only changed the last day of the year. So if that was the case, I would get 10% of the 130. But in this case, the 50,000 were issued on the 1st of the 1st, so there were 180,000 for the year. So my debenture interest expense would be 180,000 by 10%, which is 18,000. There was none owed at the end of the year, so I must have paid 18,000. Because there was none owed at the start, 18,000 expense for the year, paid all of those, nothing due at the end. With taxation, we can see that the opening balance was 47 in the liabilities and the closing balance was 55. So opening due 47, closing 55. The taxation expense, it tells us in the question, the tax charge for the year was 65,000. So that's going to be my expense, 65,000. So at the start I owed 47 and my charge for the year was 65, which is 112. Then I only owed 55 at the end of the year, so I must have paid the difference. So 47 plus 65. And then I'm just going to take away the 55, which means I must have paid 57,000. And again, because that's a payment, I just put it in as a minus. 47 plus 65 minus the 57 that we paid leaves us with the closing balance in the balance sheet of 55,000. Again, with dividends, there's no dividends due at the start or no dividends due at the end. So my opening due is 0 and closing is 0. In the question, it tells us dividends paid during the year amounted to 55. So the paid was 55. So if there was none owed at the end and I paid 55, the expense must have been also 55. Otherwise, there would be some still due. So these figures here, these expense figures, I'm going to put into my abridged P&L, and the paid figures, the one that actually were figures were actually paid, are what goes in the cash flow statement. So now with those workings done, I think we're okay to start the question. So the first thing we have to do here is the abridged P&L. So with the abridged P&L, we're going to start at the bottom and work our way up. First of all, I can put in these figures because I have these in my workings. I know my dividends. If I go back to my workings, my dividends were 55, so they'll go into minus 55. My tax I have from my workings here is 65, and my debentures I have from my workings here are 80. I can see from the question that my profit and loss balance at the end of the year was 361,500. So that's 361,500. My profit and loss balance at the start of the year was 356,500. So my profit for the year must be the difference between the two of them. So my profit went from 356,500 to 361,500. So my profit must have been 5,000 as it went from 356 to 361,500. So now working our way back up, some figures, the profit after tax less dividends of 55 gave me 5. So that obviously must be 60. Because 60 minus 55 leaves me with 5. My profit before tax less tax of 65 leaves me with 60. So this obviously should be 60 plus 65, which would be 125. Again, when you're working back up, if it's a minus, you're just actually adding. You're doing the opposite when you're working your way back up. Again, now in this question, there is no investment income, so that's going to be 0. I just left it there because in some questions there are, so I just need to be careful. So my operating profit less 18,000 leaves me at 125. Well, this is just going to be 125 plus 18,000, which is 143. And again, so I'm just adding, and if there was investment income here of, let's say, 5,000, then you would take that away, which would bring you to 138 or whatever if there was investment income. But again, there isn't in this question. So now I know that my operating profit is 143,000. So that was the first thing we were asked to do. And just to look at the question, part 1 there, we were asked to do an abridged P&L. Now we need to prepare a cash flow statement, including the reconciliation statements, okay? So we need to do a cash flow, including reconciliation statements. There's 2 reconciliation statements. There's a reconciliation of operating profit to net cash inflow from operating activities. Then we do our cash flow, and then we have a second reconciliation of net cash flow to the movement in net debt. First of all, anyway, to start off with, we are going to do our reconciliation of operating profit to net cash inflow from operating activities. The first thing we're going to start off with here is operating profit, and that's simply the top figure from above, the 143,000. That's why we did the abridged first of all. Now, here, students can find this difficult, and again, you try and explain it, but I would just remember what you do with certain things here. So with depreciation, you always add depreciation, always. Depreciation is a non-cash item. For the profit on sale of fixed asset, I would say you would do the opposite of what you think. So if it's a profit, it would go in as a minus, and if it's a loss, it would go in as a plus. The bad debt provision, I would say it's the same as you think. So if it's an increase, it goes in as a plus. If it's a decrease, it goes in as a minus. So same as what you think sign-wise. And with stock debtors and creditors, stock and debtors are the same. They're both assets. So they are the opposite of what you think, meaning if they increase, they are a minus. If they decrease, they are a plus. And creditors is the same as what you think. If it's an increase, it is a plus. And if it's a decrease, it is a minus. Just an easy way to remember this stuff, because in the exam, it can be very difficult for students to think if you're adding or taking away here. But first of all, anyway, depreciation is always added. And we have a working done for depreciation. Depreciation here is 145,000. Profit on sale of fixed assets. With these, any non-cash expense you would add, and any non-cash income you would subtract. Okay, so, and again, you can think of it that way, or simply for the profit on the sale of fixed assets, it's the opposite of what you think. So in this question, it's a profit of 5,000. So if it's a profit and it's the opposite of what you think, sign-wise, it goes in as a minus 5,000. The bad debt provision is the same as what you think. So in this question, if you look at the bad debt provision, if it's the same as what you think, meaning if it goes up, plus, down, minus. So bad debt provision goes from 5,500 to 8,500, which is an increase. So if it's an increase, and it is the same as what you think, that will be an plus 3,000. Stock increase, just to explain, I suppose, but it is stock and debtors. With stock, if it increases, means you have more stock than you had last year, so you spent more money, okay, so your cash will be down, okay? So this is a stock increase, So it's going to be a minus figure because you bought more stock, you spent more money, your cash is going to go down. That's similar with debtors. If debtors is an increase, meaning more people owe you money, meaning you've received less money, so your cash is going to go down. So both of those, if they're increases, they're going to be minuses. And again, the way I remember, I'd say it is if they're increases and they're the opposite of what you think, they're going to be minuses. Just if you can't fully understand why, it's an easy way to remember it. So again, stock has gone from 295 here. Stock has gone from 295 to 350, which is an increase of 55. And if it's an increase to 55 and the opposite of what you think, it's going to be a minus 55. And again, because there's more money tied up in stock. Debtors, again, if we look at the question, debtors have increased from 110 to 170, gone up by 60. Again, if it's the opposite of what you think and they've gone up, it's going to be a minus 60. And again, the reason for that is debtors owe us money. If more people owe us money, it means we've received less cash. And creditors are people that we owe money to. So if creditors decrease, means people we owe money to has decreased, meaning we spent more money paying them. So if creditors have decreased, we spent more cash, it's going to be a plus figure. But again, I would just think if stock and debtors are assets and they're the opposite of what you think, then creditors are liability, they're the same as you think. Meaning if they go up, it'll be a plus. If they go down, it will be a minus. Creditors here have gone from 235 to 202. They've gone down by 33,000. And if it's the same as what you think, if it goes down, it's going to be a minus 33,000. So now I'm just going to add those, and they come to 138,000. And there's nothing really else that should come up in there, hopefully. Now, the cash flow itself. So the first heading in the cash flow is going to be operating activities. That is simply the total from the previous part, 138,000. Heading 2 is return on investment and servicing of finance, which is really any interest that we received or any interest that we paid. Again, because it's a cash budget, any money coming in will be a plus, any money going out will be a minus. There is no investment income in this question. If there was investment income, it would be a plus figure. The debenture interest paid, again, that's going to go in as a minus because it's paid, and we're going to get it from our workings here. Debenture interest paid, 18,000. Taxation, again, it is paid, so it's going to be a minus figure, and again, we're getting it from our workings, 57,000. Capital expenditure and financial investment. So the first thing here, this is if we buy or sell any assets, buy or sell any assets, we'll go in here. So there's a sale of an investment. Where are we getting that from? If we see here, investments were 200,000, they're only 100,000 now. So we must have sold investments of 100,000, and because we sold it, it's money in, we're up 100,000. Sale of the fixed asset, we got 30,000, and we can see that from our workings here again. We got 30,000, so that's the physical money we got into our bank, so that's what's going to go in our cash flow statement, and again, that's a plus 30,000. And purchases of fixed assets, again, coming from our workings. That's why it's just useful to have these workings done. We can go up here, purchase of fixed assets, and that's going to go in as a minus because it's a purchase spending money. So any money in plus any money out minus. So they come to minus 90,000 in total. Equity dividends paid, again, we're simply taking that from our workings here. So dividends paid, if I go down to dividends paid, 55,000. Now, we need to total these here. You have to total them after the 5th heading. Otherwise, you will lose some marks. So I'm going to total these up, and it comes to minus 82,000. Okay? Because it's a minus figure, it's an outflow. So that's net cash outflow before liquid resources and financing. And again, all that goes into dividends is the dividends figure, dividends paid figure. So as that's a minus, it's net cash outflow before liquid resources and financing, which is our last heading. If it was a plus figure, it would be net cash inflow. The 6th heading then, so the 6th heading, this is before liquid resources and financing. So heading 6 is management of liquid resources, and heading 7 is financing. So all that goes in the management of liquid resources is if we buy any government securities. So here in this question, at the start there was no government securities, at the end it was 56, so we must have paid 56,000 for government securities, which goes as a minus 56,000. In financing, we are going to include if there was any increase or decrease in debentures, which are long-term loans, or if there was any increase in share capital or share premium. So the first of all, debentures, and debentures we need to be careful on, because sometimes our debenture, our loan goes up, sometimes it goes down. If we look in this question here, our debenture went from 130 to 180,000. You might think that's bad because we have more of a long-term loan, but we have 50 grand more cash to spend because the loan has gone from 130 to 180. So for the sake of a cash flow, we have 50,000 more. So that's going to go in as a plus 50,000. So the way to think of it with the debentures, if they go up, it'll be a plus figure. If you go down, it'll be a minus figure. Because if the debentures go down, means you paid off your debentures, so you will spend cash to do that. Shares have gone from 250 to 310, so that's an increase of 60,000 from the shares. Issued shares went up by 60,000, and the share premium, which is the extra amount charged on the shares, has gone from 0 to 15. So again, they've gone up 15,000. We got a premium of 15,000 on those shares. So share capital and share premium should always be plus figures, and the debenture, you need to be careful with, can be either plus or minus. So in total, they come to 125. So up to as far as the fifth heading was minus 82, and then we adding 6 and 7, which gives us a decrease in cash of 13,000. Now, the good thing about cash flow statements is when you get this far, you can actually check, is that figure correct? So I just down at the bottom here, I'm going to have a look to see, is that figure correct? To do that, we need to just have a look at our cash and bank figures. So this year, I have an asset in cash of 34,000, so that's good. And I have a liability, a bank overdraft of 18. So cash is 34. And bank is minus 18. That comes to a net position of up 16,000. In the previous year, my cash was 60 and my bank was 31. So again, cash is an asset and bank is a liability. Sometimes a bank might be an overdraft one year and an asset another year. If it is an asset up here, we're going as a plus, but here it's not. So again, it's plus 60 and a minus 31. So I have a net cash position here of 29,000. So in total, last year between cash and bank it was a plus 29. This year it's a plus 16. So it has gone down by 13,000, minus 13,000, and that should tie in with this decrease in cash minus 13,000. So at least we can check that, which is good. The last thing there is the reconciliation of net cash flow to movement in net debt. So the first thing I'm going to start off with here is the decrease in cash in the period from the previous part, minus 13,000. Then what will go in is the cash used to purchase the liquid resources. So again, I will just think of this as the opposite of the cash flow. Whatever the liquid, the government securities or liquid resources are here, I just goes in as the opposite sign. Because I suppose you're dealing with cash in the cash budget, and this is about debt. So just think of it, it should be the opposite sign. So that goes in as plus 56. And again, the debentures is the next thing. The debentures will be the opposite sign to what they are here. So if it's a plus 50, it'll go in as a minus 50. If it's a minus 50, it goes in as a plus 50. Just an easy way to remember it. So both of these will be just the opposite signs of the cash flow. So they come to minus 7,000 is the change in net debt. Then I get my net debt at the start. Again, for your net debt, you're just taking your positive and negative bank figures, including your government securities. So if we have a look at that then, 0 is coming, there's no government securities at the start. So that would be 0. Then I'm going to add my cash, which is 60. So 0 plus the 60. And then I have a bank overdraft of 31, which is a minus 31, and a loan of 130, which is minus 30. So you're taking your bank or your cash, your government securities, and your loan, because they are your net debt. So it will be 0, which is the government securities at the start, plus the cash is 60 minus the overdraft of 31 minus the long-term loan or the debentures of 130, and they're minuses because they're liabilities. So they come to minus 101,000, and now I just add in here minus 7 minus 101 is minus 108,000, which is my net debt at the end. And again, when I calculate it the same way as the net debt at the start, it should add up to minus 108. So again, I'm taking my government securities of 56, they're an asset, a plus. My cash of 34, an asset, a plus. My bank overdraft, a liability, it's a minus of 18. And the debentures, a loan, minus 180. So if I add these across, 56 plus 34 minus 18 minus 108, that does come to minus 108. So that works out. It adds down, and then when I check it, it also comes to minus 108. So I know that is correct. And the last part of the question was just a bit of theory. What is the purpose of cash flow statements, and explain why, having earned a profit in 2014, the company's cash balance has declined. So just to look at the theory very quickly. Purpose of cash flow statements: to show the profits do not always equal cash, because you mightn't get in the money straight away. To show cash inflows and outflows during the past year, to help predict future cash flows, to help financial planning, provide information to assess the liquidity in the short term and the solvency in the long term. You have to do it to comply with legal requirements in certain cases, and to aid application for loans. If you're looking for a bank loan, they would probably want you to do a cash flow statement. Why is it decreased? Because the purchase of fixed assets reduced cash by 220,000, but did not reduce profit, because it would be it's not an expense, it's an asset. Okay. The purchase of government securities reduced cash by 56,000 for the same reason. The payment of dividends 55, tax 57, reduced cash by 112, but didn't reduce profits. They're all non. They are. They will be included in the profit and loss account. And the increase in stocks, debtors, and decrease in creditors reduces cash by 148, but didn't reduce profit. Again, so that's just a small bit of theory at the end.